Australia's housing market is breaking all the rules. Just when experts call the top, prices rise again. Just when analysts predict a slowdown, demand explodes. And now, new data suggests we may be entering one of the biggest wealth windows in decades, a 5 year property boom that almost no one is talking about. Today, we're diving into why 2025 to 2030 could be the moment that transformed thousands of portfolios and how you can position yourself before the crowd wakes up. Over the past 7 years, Australia's population has grown by nearly 3 million people. But while our population surged, rental listings were cut in half from 80,000 to just 37,000. Homes for sale also down 25%, falling from 319,000 to 239. That's fewer homes for a lot more people. And in real estate, that only means one thing: prices rise. This isn't a small imbalance, this is a structural choke point, a national undersupply that pushes renters into bidding wars and forces buyers to stretch budgets further than ever before. According to national data, Australia is nowhere near building the number of homes we need through to 2029. Now, here's how each state is ranking at the moment. New South Wales is just 65% of the required homes, Queensland is 79%, Victoria is the only one meeting the demands at 98%, South Australia is about 71, Western Australia is 81, Tasmania is 51%, and Northern Territory is just at 31%. The national average, 78%. That means deep shortages in places like the Northern Territory, Tasmania, South Australia, and Queensland, the exact markets where rising demands will hit the hardest. And for smart investors, shortages aren't a problem, they're an opportunity. Because where supplies stay low, prices tend to run. Even after years of growth, buyer confidence is stronger now than during the 2021 boom. Surveys show more Australians expect prices to rise this year than at any time since the pandemic surge. This creates what experts call the herd effect. When people believe prices will rise, they buy fast. And that belief becomes the very force that pushes the market higher. Just like Robert Greene says in the 48 Laws of Power, control the narrative and you control behavior. Right now, the narrative is simple: prices will keep climbing and people are acting on it. Despite interest rate hikes, mortgage arrears sit below 1%, the lowest since 2022. Australians aren't falling behind, they're saving. Offset account balances are rising, giving households the buffers they need to stay confident and keep buying. As one investor said, you win by managing cash flow, not by timing fear. These savings cushions are exactly why the market hasn't cracked and why demand will keep rising into the next 5 years. Some of the best opportunities right now are hiding in cities people often overlook. Perth, Darwin, and part of the regional South Australia have been underperforming for years, but their fundamentals never disappeared. Low entry prices, strong rental demand, population growth, and tight supply are setting the stage for what investors could call the catch up effect. These markets could deliver above average returns as affordability and demand collide. Sydney and Melbourne, though, pockets of gold. Don't write off the big cities. Even in slower markets, micro markets boom. Southwest Sydney, inner Melbourne, and middle ring suburbs with strong infrastructures and employments are still seeing powerful demand. The secret? Don't think in the terms of cities. Think suburbs within suburbs. Real estate isn't one wave, it's a series of ripples. Here's how it gets big. Projections indicate that up to 100 suburbs could see price growth of 50 to 100% by 2030. Most of these suburbs still sit below 500,000, and history tells the story. In the past decade, 75 suburbs under 500,000 have already crossed the 1 million mark. This is how wealth is built quietly. The investors who position early in affordable, fast growing corridors often end up holding $1 million assets just a few years later. Ob- Property commentators say the middle class is being obliterated, and while it sounds dramatic, the data backs it. The gap between Australians who own appreciating assets and those who don't is widening every year. In a world where wages grow slowly and housing costs soar, property ownership becomes the dividing line. Those who act strategically build wealth. Those who wait for the right time watch the opportunity pass. The right time rarely announces itself. It's recognized by people who read the data and move early. Smart buyers use location data, supply indicators, and expert insight to move before the crowd. This is how you get ahead of the pack. When you know what's coming, you don't chase the market, you get there first. Australia's property story for 2025 to 2030 is clear. Supply is tight, demand is rising, households are strong. And while many wait for a crash that never comes, informed buyers are quietly building wealth. Remember, those who move first set the terms, and those who wait pay the price. Now, thank you for watching this video. If you have any questions regarding this, please make sure you comment and we can get back to you as soon as we can. If you like this video, please like, and if you haven't already, subscribe. Thank you very much.